guys, welcome back to the channel. I'm Michael Studebaker, and today we'll be talking about the investment habits that help change my life and why I think it's essential if you're going to be investing for the long term. If you haven't already, please subscribe, hit the like button, hit the notification bell if you want to see more content like this. Let's get straight to it. The first thing is knowing what your field of competency is and what isn't. Everyone has knowledge and passion for a specific area or industry. Use that to your advantage, and I would suggest only investing in areas that are within your field of competency, as you would have inside information, knowledge regarding it that would give you an edge in understanding of how it works or how it operates. If you don't have knowledge or interest in that industry, don't invest in it, as there is a good chance you'll make a loss on your investment. A lot of people see the hype or news about a company or stock going up and will think that if they just follow the trend, they will make money. When in reality, it isn't easy like that. Investing is a cycle. It always has ups and downs, and some years your investment could be losing value, and this is where understanding comes into play, because you need to know why it is. Do your own research. This is very important advice I wish I knew when I was younger. Going in following someone else's advice without doing your own research will end up hurting you in the long run, because if you make a loss on one of those stocks that they advise you to invest in, will just result in you blaming them when really the lack of due diligence was the reason. Don't get me wrong, researching individual stocks and companies is time consuming and hard to do, but I can say that by doing this, it gives you a detailed understanding of the business, therefore giving you a more informed decision when choosing to invest in them, which most likely this way would make you the most money while informing you why they're making losses that year. Trust in your own research, and most importantly, don't be persuaded by someone who says something completely different or disagrees with you. Don't wait to invest. If you can and have done your research on that company or stock, and you have competency in them, then invest now. Waiting to invest means you may miss out on some of the best trading days, which gives you the most return and growth, lowering your potential returns. Especially if you're young, the biggest advantage would be to start investing early, as this money will be worth more when you're older, and you wouldn't have to invest as much money for that money to be worth the same amount later on. Time is on your side. You just have to change your mentality to a long-term view rather than short-term, because we could die tomorrow, which is very possible, but very unlikely. If the market has any corrections, you can wait it out, and the best thing about certain stocks, like dividend-paying ones, is that you can reinvest that back into your portfolio, which will allow it to grow over time, and we call that compound interest. Some companies that have been around for at least 25 years and have managed to increase their dividends are called dividend aristocrats. Most of these companies have been through a recession or market crash, so even if the market is fluctuating or making a loss, they haven't missed a dividend payment and have even managed to increase the dividend payment over the years. Invest consistently. By doing this, you're giving a constant increase in your portfolio, allowing you to invest more into those stocks, giving you a bigger return each year. Just think of it as a lifestyle and make it a rule to invest every month an amount that you don't need and use short term. When you invest with a brokerage, they give you the option to set up automatic withdrawals from your bank account into the brokerage, which you can use to invest. Use that option so that you'll have buying power every month to invest in companies you believe and have knowledge in. This is the fastest way to build your portfolio and to reach that FIRE, which is financially independent, retire early, which I will be talking about more in detail in another video. Make sure the money you put in to invest is the money you would not need short term and usually would put into your savings account otherwise. This is because when you invest, it's a cycle, so there will be ups and downs, and you don't want to be in the position of needing that money while your investment is down, because it will force you to liquidate some of your portfolio at a loss. Just remember to have an emergency fund of 3 to 6 months saved up, and that you need to be patient with your investments, as over the long term, there's a good chance they will become profitable. Lastly, don't try to time the market. This is very important as most people will try to wait and time the market for the best entry, which will result in them missing out on potential gains and growth. Studies have shown that if you try to time the market and miss the best trading days, you can miss out on a lot of growth. A study done by Fidelity Investments showed that a principal investment of $10,000 from 1980 to 2020 in the S&P 500 index would net you around $697,421. But if you just missed the best 5 days, it would only net you $432,411. See how big the difference is? And that is just 5 days. If you missed the best 10 days, it would only be worth $313,377. And if you missed the 30 best days, it would be worth $115,481. And lastly, if you missed the best 50 days, it would only be worth $48,434. So the take-home lesson from this is don't try to time the market. Instead, do dollar cost averaging, which is when you invest a certain amount consistently spaced out over regular intervals. These investment habits have really changed my life and helped me build towards my future financial independence. Every investment I do, I always refer back to these habits as they produce results. If you follow these habits when investing, you'll be good to go. My email is there. If you guys have any questions, feel free to ask. So I hope you guys enjoyed the video, found it helpful. If you did, please subscribe, like the video, hit the notification bell if you want to see more content like this. I hope that you guys will develop these habits and use them when you invest. These habits will surely get you guys towards your investment goals. The journey towards financial independence isn't an easy road, but by using these habits, it'll make it easier. Remember, consistency is key and hard work pays off. Thank you guys. I'm Michael, and I'll see you guys in the next video.